Think the recession is a time of financial despair? Think again. Warren Buffett, the Oracle of Omaha, sees it differently. As we stand on the precipice of the predicted 2024 recession, it's easy to let fear cloud our judgment. But what if we told you there's another way to look at it? That's right. This economic downturn, as daunting as it may appear, might just be your golden ticket to financial success. Warren Buffett, a titan of the investment world, views these economic ebbs and flows with a different lens. He sees them not as threats, but as opportunities ripe for the picking. For those willing to brave the storm, a recession can actually be a time of great financial opportunity. It's all about understanding how to navigate these turbulent waters. While many fear the storm, Warren Buffett sails right into it, knowing that the calm seas of prosperity lie beyond. Scene script: Warren Buffett, a man who built his fortune in the stock market, has some valuable advice for us all. In the investment world, Buffett is a beacon of wisdom, with his philosophy rooted in the long-term perspective. When it comes to recessions, many see them as periods of doom and gloom, but not Buffett. He sees them as golden opportunities. Why? Let's break it down. Buffett's first tip is to maintain a long-term investment horizon. He once said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This isn't about being stubborn or resistant to change. It's about understanding that true wealth is built over time. It's about patience and resilience, about weathering the storm rather than running from it. Next, Buffett emphasizes the importance of productive assets. These are assets that don't just sit there, they generate consistent cash flow. Think real estate, businesses, farmland. These are the cornerstones of his investment philosophy. They are tangible, they have intrinsic value, and they produce income regardless of the economic climate. In the same vein, Buffett believes in investing in companies that have a consistent cash flow. But what does that mean? In simple terms, these are companies that make money regularly and can sustain their operations without needing to borrow excessively. They are resilient, and they have the capacity to not just survive, but thrive during economic downturns. Buffett's last tip is to keep emotions in check. Investing during a recession can be scary. Prices are falling, news headlines are grim. But remember, Buffett didn't build his fortune by following the crowd. He kept a cool head when others were losing theirs. So, when the market is in turmoil, remember Buffett's sage advice: be fearful when others are greedy and greedy when others are fearful. Buffett's strategies are not about quick returns. They are about patience, resilience, and belief in the enduring value of productive assets. So, as we brace ourselves for the predicted 2024 recession, let's take a page out of Buffett's book and see opportunity where others see threat. So, what can we learn from the Oracle of Omaha's approach to investing during a recession? Firstly, Warren Buffett's recession strategy underscores the significance of a long-term investment philosophy. In the face of economic downturns, the instinctive reaction might be to sell out of fear. But Buffett advises against this. Instead, he encourages investors to adopt a long-term perspective, focusing on the intrinsic value of investments rather than temporary price movements. This approach allows you to weather the storm and come out the other side stronger. Secondly, Buffett places great emphasis on investing in productive assets. These are assets like businesses, real estate, and farmland, which generate consistent cash flow over time. These types of investments can provide a steady income during a recession, offering a cushion against potential losses elsewhere. It's like having your own personal safety net, ready to catch you if the market takes a dive. Additionally, the Oracle of Omaha views recessions not as threats, but as golden opportunities. When others are selling off their stocks in a panic, that's when Buffett steps in to buy. He understands that during a recession, many stocks are undervalued, presenting a unique opportunity to buy low and sell high later. Buffett's strategy is akin to shopping for bargains during a sale. Who wouldn't want to buy $1 for 50 cents? Finally, it's crucial to remember that Buffett's strategy relies on thorough research and a deep understanding of the businesses he invests in. It's not about following trends or making quick, impulsive decisions. It's about taking the time to understand the fundamentals of a business, its future prospects, and its true value. In the words of Buffett himself, be fearful when others are greedy, and greedy when others are fearful. The upcoming recession could very well be your opportunity to seize the day and make significant gains in the stock market.